Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Alrighty, good morning and welcome to Plug and Play's Credit Union webinar. Thank you all for joining us. My name is Tim Gervin and I am an Innovation Manager at Plug and Play. Next slide, please. Thank you. To start things off, we will go over an overview of who we are at Plug and Play, followed by a panel discussing innovation despite regulation and presentations from 3 startups with solutions from the credit union industry. And as a reminder, please make sure to stay on mute as the speakers are talking. And then now to hand it off to Stephen.
Awesome. Thank you, Tim. And we couldn't be more excited to have you all here today for our first credit union event. So myself, I'm Stephen Fay. I'm Director of Corporate Partnerships. I've been in Plug and Play now for just over 5 years. And I'm excited to kick things off today with a quick overview of who we are and how we got started. And hopefully give you guys a good understanding of the event today as well. So at our core, our mission is to really drive innovation by connecting entrepreneurs, corporations, and investors worldwide. So what this means at our core is we're here to cut through all the noise and really help matchmake you guys with startups and corporations based on your pain points and challenges, regardless of the space, size, and shape. So just to break it down a little bit further for you guys, if you look at Plug and Play from a high level perspective, everything that we do falls more or less into these 3 buckets or lenses. So at the far right, venture capital, that's Plug and Play at our core. We invest in over 250 early stage startups a year. We focus on the early stage side of things. So the seed stage to Series A is more or less our sweet spot with an average check size around 150,000. But outside of just VC and investing in startups, we also put a big focus on startup acceleration programs and corporate innovation. We run over 65 accelerator programs across 20 different industries a year. And we work with over 550 corporations globally, and excited to share more here shortly. So just to touch base on our competitive advantage a little bit more. So outside of Plug and Play being an early stage investor and focusing on early stage startups, our ecosystem first and foremost is stage agnostic. And this is very different from many other accelerators, incubators, VCs, and more out there. We work at all stages and sizes of startups, anywhere from pre-seed to Series D and beyond. And our second big differentiator is that we actually don't require equity from startups to enter into our programs ecosystem, as we want to reduce all the barriers of entry so we can work with the best startups around the world. We now work with over 50,000 startups across these 20 different industries, and we're only invested in about 2,500 of these companies. So our real goal is to matchmake you guys with startups and solutions that are directly related to your challenges, your pain points, regardless of if we have an equity stake in them or not. And lastly, we really focus at least that for these startups to have an enterprise-focused solution or MVP. We want them to have a product that they can easily partner with you on. And lastly, we now span across about 20 different industries, as I mentioned, and I'll showcase here in a second. But we understand how much technology overlaps and is adjacent to one another. So having that horizontal access across many different industries really lets our ecosystem explore what's out there. And then last but not least is our global reach. We now have 40 offices across the world. We typically are expanding and growing about a new office every quarter. So I'll showcase a few of those offices here in just a second. So like I mentioned, here's a quick snapshot of our global presence. Outside of North America, we have offices across Europe, Asia, the Middle East, South America, and more. A few reasons why we have these offices, and just what I want to showcase is, since we have such a strong ecosystem of corporations, we want to have a location near and dear to their backyard so they can have their business units and teams engage on a more frequent basis. But also for sourcing efforts, we now have a ventures team of over 100 people sourcing for startups on a constant basis throughout the globe to make sure we have a constant pulse on the hottest, best, and brightest startups from around the world. And then just lastly, I know we talked about this a bit, but Financial services, fintech, insurtech, crypto, health, enterprise, and more have grown to be some of our largest programs at Plug and Play. But as you guys know, we now span across about 20 different industries. And since so much technology in this day and age overlaps one another, when we source for technology, we source for startups, we don't typically source just within a specific industry or vertical, but really across the ecosystem, as there is technology that's relevant across many spaces that individuals and corporations may not necessarily think so to begin with. Awesome. So hopefully you guys got some quick details on Plug and Play. If you want to find out more, please reach out to myself, Tim, the team. We'd love to share more details and find out how we can work with you guys on your corporate innovation strategy and roadmaps as well. So I'll pass it back over to Tim, and we'll be shortly kicking off our panel for the day.
Thank you, Stephen. Yeah, so now I'd like to introduce Jay, National Leader of Blockchain and Digital Assets at RSM, Edward, EVP and CIO of Logix Credit Unions, and Kyle, the Vice Chairman of the National Credit Union Administration. Jay, I'll let you take the wheels from here.
Thanks, Tim. Much appreciated and super excited about the panel today. As Tim said, I'm Jay Schulman, the leader of blockchain and digital assets at RSM, and we've been helping financial institutions, so those regulated by the OCC and the FDIC, certainly state regulated charters, and of course, who I'm here with today, credit unions as well, think through and potentially get into the digital asset and cryptocurrency space. With that said, let's introduce my fellow panelists here today, Edward and Kyle. Kyle, do you want to go first?
Introduce myself, sure. You guys know NCUA, obviously it's the insurer for all most credit unions, and we are the regulator for all the federal charters. I'm the vice chairman, but don't be too impressed. There's only three of us, the chairman, vice chairman, and then the other board member. My term is till 2025, and I spoke at a convention this week, and I just share with you the guiding principle, which is that I don't want to see credit unions go the way of Blockbuster Video because their regulator didn't let them compete with newer alternatives. So I'll leave it there, and I'm glad to be here.
Thank you, Kyle. And Ed?
Morning, everybody. My name is Edward Chuang. I am the Chief Information Officer at Logix Federal Credit Union. So Logix is a 8.6 billion asset size credit union based in Los Angeles. And I'm proud to say that we were named a top 100 bank this year, as well as having been recognized as a best in state credit union for the past 4 years by Forbes. I've had a long and windy career that included being the head of digital banking technology at Navy Federal Credit Union. I've also led large-scale financial systems implementations for the U.S. Department of Defense, had a brief stint as a Salesforce consultant, and worked in the Fortune 200 insurance tech world. Along the way, I founded some startup companies, helped others launch their startup companies, and have really been keen on innovation and doing good with the power of technology throughout my career.
Thank you. And I want to start talking about innovation between Edward, your background, and Kyle, what you kind of just said. Maybe Kyle, let's start off with you. We've probably spent the last 8 minutes talking about fintech and innovation. I talked a little bit about digital assets, cryptocurrencies, and you just made the comment that you don't want the regulator to prevent people from innovating. So how should a credit union be thinking about all of this?
Well, the main message I would get is that we and the regulator are in listening mode. I was very happy to put our first piece of guidance in December. Now that was on investing in crypto because credit unions kept seeing all these outflows to places like Coinbase. And most people say they would prefer to do their first, dip their toe in the water with crypto via their existing financial institution. So now we have these partnerships. And the key thing I want to stress is the thing we put guidance out was totally fine to do. It didn't break a rule. The reason we didn't have to put a new rule out is because it didn't break a rule. But the kicker is this same exact partnership with the same vendors, and I'm not here to endorse anybody. They went to 30 credit unions to start. One of them said, yes, let's do it. And they did a pilot. The other 29 said they were worried about a regulator, even though it didn't break any rules. So this is where I think government often doesn't realize they're bam. They don't know their own strength, what they say, what they don't say, how it lands. And then we put the guidance down saying, yes, this is okay to do. And here's some parameters. and then things launched into action. And now those credit unions have a new source of non-interest income. I actually think that the big impact of crypto and blockchain won't necessarily be the investing side, although good for you if you got rich on it. It's going to be the services, right? And you guys remember the first .com boom when there was a crash, you know, Netscape and all those companies that are gone. If you didn't know any better, you'd think, oh, that internet thing is over, because you're thinking about the internet stocks, and there was a lot of talk about the investing side of it. But the core thing called the World Wide Web, that was legit. It did change the world, and it changed the way that banks and credit unions do everything. But the same stuff they always did: pay bills, make loans, have custody of assets, give out tax forms. It just changed the way they did it. And I think blockchain may do the same thing, like for things like title, et cetera. So I don't know if that's helpful, but.
I think it's very helpful. And I want to highlight something you said at the very beginning that I thought was really interesting. I certainly believe in it as well, is that for all the talk of tech companies helping you buy cryptocurrency, I think there's a broad desire for the everyday person who wants to get some Bitcoin, for example, to do that with a regulated financial institution, whether that's a bank or credit union or what have you. So Kyle, great background. Edward, you've been in the mud in all of this innovation and thinking through digital assets and fintech and all of this stuff. How have you gone about innovating at your credit unions?
Yeah, well, I think to start broadly, for credit unions, innovation really has never shifted from the focus of the credo of the credit union, which is to have people help people. So I think with innovation, whether we create it or adopt it, it's in line with that goal. Now, having said that, I think what's really new in the past 7 years is that there's fragmentation of the core technology stack. So now we see things like lending, core technology, blockchain, payments, all available as a service. So along with that, we see a large entrance of non-chartered entities and startups offering banking-like services and getting really creative in the ways that they acquire adoption or and offer services. So I think with innovation, the real question is, how do credit unions reconcile this ecosystem disruption and remain valuable when it seems like the traditional boundaries of banking is dissolving? So I think, to my philosophy, and to answer your question, my general philosophy is don't fight it, right? So whether it's blockchain, whether it's crypto, I believe strongly in working together with startups, with our regulators, and building new ecosystems, because through programs like Plug and Play's corporate partnership program or other programs, I can innovate new and better ways to serve our members much more effectively than if I were left to my own devices. And I think by leveraging Plug and Play's network and other partnerships to meet with the founders of startups, they also have the wealth of knowledge and ideas. And in turn, we as credit unions share feedback to them about market fit. So overall, I think that's how we create a highly effective industry partnership.
I love that, Edward. That's a great background. And so that was really helpful, foundational, what maybe you've been thinking about, today and in the past. Kind of walk me through what you're thinking about over the next year or two. What's the future things that you think are coming?
Yeah, I love this question because, as we look across multiple future horizons, like we do in the credit union world, there's really a lot of innovations that can help both FIs and people. I think to start for the next 1 or 2 years, I really can't help but reinforce the message of the vice chairman. I think services built on blockchain technology is going to be a game changer. So through one functionality at a time, so whether that's streamlining lending services or reducing counterparty risk, allowing authenticated documentation, and on, we're going to see fundamental shifts in infrastructure and processes throughout the whole financial life cycle. And probably the best part, and I think the best part of this panel, as well as the message of the vice chairman, is that credit unions don't need to worry about figuring it all out individually from the ground up, right? We can leverage our innovative partners, and through the support of the NCUA, we can all realize these benefits together.
I said the same thing yesterday, or this Tuesday in my speech, that if people say, I know it's new, I don't understand it, I get it. Now you guys were maybe more tech savvy, but I've had a Hotmail account since 1996, and I hit send and somebody else gets it. I haven't the first clue what happens when I hit send, right? And I told these credit union executives, at our convention, like, the internet changed all these things. It changed the way you do, deposits, via your account, everything. Most of these executives don't really know how the internet works, and I don't either. And we don't need to know. Vendors do. Vendors, so the reason I care about this so much is for two reasons. One is I'm a fiduciary, one of three, of our $20 billion insurance fund that we have to write checks when credit unions fail. And I'm not doing my job if I don't give them a chance to succeed. We'd be a pretty bad insurer. The second reason is we're trying to advertise to folks like Plug and Play and, Silicon Valley and venture capital and crypto bros in a garage, whatever it is, that credit unions are here. They're a decent market, 130 million Americans. Please make products for them. And we don't want to be known as, don't bother crafting your product for credit unions. They're just a pain. They're kind of old school. That's why I accept invitations like today. Thank you for that. People get too concerned about the tech side. It's important that there's important vendors they need to know. But I said to the convention, if you had to go back to your younger self from 20 years ago and explain what a smartphone is, you wouldn't talk about 5G spectrum and satellites. You'd probably say, it's so cool. When I need a ride, I hit a button and a Hyundai Elantra comes and picks me up and gives me a ride home. You would just say the services. So I think that there's a little too much anxiety. And as long as there's vendors and as long as we do our job saying, hey, credit unions are here and they're ready to innovate and their regulator is not going to stop them. And our regulator is going to be accepting of failures and things that don't work and experiments. The word experiment means you don't know what the outcome is. So anyway, that's my message, but I hear you on that 100%. Most of these credit union executives that have mobile sites, they don't know how their mobile site actually works. Like it beams to space or something, I don't know. And they don't need to know.
Well, and Kyle, you said, you always say something up front that gets me, your Hotmail account from 1996. And if you don't remember your Hotmail account from 1996, I certainly remember mine. Text-based. I don't know that you could do bold or italics or any, right? It was just raw text. And again, you didn't think about what you were missing, right? And of course, today, that same email, unfortunately, it's probably spam, is filled with, images and bold and italics and colors and things like that. And so I do think it's important, like you said, this experimentation phase that we're in right now, we're still early here in this evolution. And I like picking that example in particular because a lot of the innovation I think that needs to happen in this space is not how things work on a blockchain, but actually the user interface. How do we make this work? And I think that email example is in fact really appropriate here. So Kyle, finish us off here with a quick thought. There's a lot, like you said, we don't know everything. We're still in the experimentation phase. How are you guys getting your head around everything that's coming your way today and probably for the next couple of years?
We're waiting for you. We're waiting for Edward. We're waiting for America's 5,000 credit unions. We're waiting for the vendors, the QSOs, credit union service organizations, because they have a business interest. And I'll say to any credit union out there, I understand that people are wary of asking their regulator, can I do this new thing? Because if we say no, now you've sort of outed yourself as, boy, maybe they're risky, right? I mean, right or wrong, people are afraid. That is what your league is for. That is what your trade association is for. They can put their head above the tree line. So I just want to stress that we're not sitting around at NCUA with all this knowledge saying, let's put this guidance out. Let's put that guidance out. We're waiting for you. Remember when I said that the guidance we put out that allowed the partnership of crypto exchanges? I said there were 30 that were approached. One of them pinged me about it in vague terms, but they still were worried for us. But the one that did it, that screenshot, they had their pilot program. I said, send that to me. I sent that screenshot to our general counsel and the other board members, and that started the conversation. And then we had a meeting just like this with both of the partners, the crypto exchange, our general counsel, so we need to hear from you. We did put a request for information out last year. It's good. It got some good stuff. It's a little vague. Bottom line is the things that you just want to do anyway, and you don't have any worries about it, then that's not my concern. My concern is what would make the nervous Nelly compliance officer, and we know how compliance officers are, and it's how they should be, what do they need on ncua.gov? What official announcement, do they need to say, okay, let's put time and energy into this project and not something else? Because there's two things that are limited in this life: time and money. Most of us are short of one or both. So, Edward, you say, we're thinking about doing this new thing with, blockchain-based title for mortgage lending or something like that, whatever it is. But we're not 100% sure. Maybe we're going to get dinged on Fannie Freddie standards, or what do you need? These words. And people can send me a picture of a cocktail napkin where they say, here's a transaction, sketch it out. We want to do this thing. And we'll sit down and figure it out. No, we're not obliged to say yes to everything. Bitcoin is never going to be on the balance sheet of a credit union. But it could have custody of it, which we don't have right now. So anyway, I can't stress enough. You say, what's coming down the pike? What's coming down the pike is whatever you guys help me with. And let me say one more thing. This is kind of my baby at NCUA, and there's political capital expended. And the thing we did in December, it went well. In order to continue on this, we need the first few things to be low-hanging fruit that go well. The way you get what you want, unless you're, have dictatorial powers and you need buy-in, is other people's careers succeed when they go along with you. So we put our guidance out in December. The world hasn't blown up. The press hasn't given us a hard time. The political system hasn't. The committee that confirmed me, Senate banking, hasn't blasted us. So if that one went well, now we'll do another one and another one. But we're waiting for you guys. And the more it goes well, the easier it is for people the more credibility I have to say, hey, let's do another project. That's kind of, so internally, this is kind of my baby. Although I got to say, the other two board members and the career staff have been great to work with. I think they get the general thing that the concern that TradFi, traditional finance, may lose out to the decentralized finance. And maybe it will, I don't know. But I don't want it to be because we didn't do our part.
Well, and that's a great transition. This is not my analogy. It's a pretty silly one. But to kind of add on to what you just said, Kyle, I think there's real value here for an expression. I can't believe I'm saying this on a webinar. The DeFi mullet, traditional finance in front and DeFi in the back, where exactly a credit union could provide a very common way to engage in this ecosystem using US dollars, but the credit union can facilitate a lot of that in the back in a safe way, and managing risk appropriately and all of those things. So I love that. And I want to level set now. We talked about this idea that a credit union or any financial institution is a good place that customers want to use these types of institutions. And as you said, Kyle, you don't want to get left behind. Maybe Ed, I'll throw this question to you. And you talked about it a little bit. Can you kind of predict? I liked where Kyle said, what's the low-hanging fruit? I don't know if you want to pick the low-hanging fruit, or you just want to pick a couple things that you think are a really good fit for digital assets and a credit union to kind of give the audience now an idea of what they might be thinking about.
Yeah, I think on the topic of low-hanging fruit, I completely agree. You obviously have to show some success up front. I'll combine that notion or question with a different challenge we're facing, which is I actually don't think that it's incumbent on credit unions to find a silver bullet technology or vendor. I think as far as low-hanging fruits go, it's actually about finding a few vendors to create a bundle of technologies to really meet the consumer's demands, especially the consumer of the future, right? So to do this, you have to not just look at crypto and just look at blockchain, but also keep in mind the first mile experience, engagement, analytics, personalization, social. And I think if you combine a few of those things together, and if you play your cards right and find the right bundle of technologies, you're really in a much better position to become the first app status for a consumer.
I love that sentiment. And I'm going to go to some questions in the chat here. And Drew asked two, not fair, Drew. So please, everybody else throw a question in here. So Drew's not the one asking all of them. I want to highlight, Edward, something you said. There's no silver bullet vendor, which was kind of Drew's first question. But he has a really interesting, different question here that's certainly of interest, maybe slightly off from the digital asset piece, where a lot of innovation in this space is around environment and sustainability. I think one of the words that we use is ESG. Either Edward or Kyle, have you seen credit unions experimenting or innovating in the environmental and sustainability space? Anything you want to kind of highlight there?
Jay, take it. I'll let Jay take it. I mean, sorry, Edward, take it.
Yeah, so I asked this question to Plug and Play actually just a couple of months ago. I think there's two aspects to ESG. One thing to keep in mind is any potential future regulation requiring it, but then the other, probably more pertinent in the moment, is really about purpose. And I've seen neobanks and a lot of startup banks, for example, offer checking accounts where they'll plant a tree somewhere if you add a direct deposit and things like that. And I think we should continue to do that. I think there's absolutely a part of the credit union culture that's about helping people, and a part of helping people is helping the earth and the place that we live in our society. So I think there's a place for that. I think there's a place for financial wellness, and I think that should all be considered in the offerings we provide.
Excellent. Thank you, Edward. So as we wrap up here on the panel, I love this last question because I think we often get distracted as we listen to these things. So if you've been distracted listening to this is the time where, give us 2 minutes here to pay attention. So ask you both, if you're from a credit union listening today, you've taken in something like 20 minutes of our discussion right now, what's the one big takeaway that you should have? And maybe Kyle, will start with you.
It would be that your regulator and insurer is in listening mode to get things done. And you shouldn't have your regulator be the reason you can't do something that's cheaper, faster, better, more secure. And if you don't want to reach out to me directly, which you're welcome to, khautman@ncua.gov. My advisor is Sarah Bang, sbang@ncua.gov. I'm on social media, LinkedIn. I'm not hard to find. I enjoy doing these things, speaking to people directly. And we all know that sometimes when they say, I don't know if I want your product, Jay, in my regular mind, like, we all know that sometimes that's just a way to get a salesman out of your face, right? So let's get rid of that, the option, because I can't have this $20 billion fund we have to write for checks for when things fail without making sure they have every chance to succeed. So we are in listening mode. Talk to your league, talk to me directly, talk to your trade groups. And it doesn't have to be well thought out, because we can get into it. Okay. Again, a screenshot was what led from a phone. A screenshot led to guidance. And yes, we had a follow-up meeting with the vendors and talk through it and everything. But communicate. If something out there is happening, you see banks doing something, or fintechs are taking mind share, wallet share, just communicate and tell us what it is. Again, it can be a cocktail napkin, sketching out a transaction you want to do, and we'll work it out.
Excellent. Thank you, Kyle. Edward, what's your one big takeaway today?
Yeah, I think my biggest takeaway and my message is that you're not alone, and none of us are, right? Just like how the NCUA with their cybersecurity audits used to focus a lot on specific processes. As information security evolved, it all really became a shared goal, and we all just wanted to keep our members' data safe. And I think as blockchain and crypto and these topics evolve, use the vendor ecosystem, use your credit union peers, and work together with the regulators. And I think we're all working towards the same direction to help people.
Yeah, and my one big takeaway, and I'm probably paraphrasing a couple different things that you guys said that I think is really important. I think we have this impression that if a credit union were to allow you to custody Bitcoin, for example, that Kyle brought up, that you're competing with Coinbase. And I don't believe that at all. I believe that there's a lot of people who don't want to go register and I'm not, Coinbase is fantastic culturally, right? They don't want to go register at a fintech or .com to go do this. They want to go to an institution that they're familiar with, their local bank, their credit union, somebody like that. And so when you go think about this, something I tell a lot of credit unions, Kyle, you brought it up really early on in our discussion of, we'll look at the outflows to some of these sites, go look at the outflows. That tells you what your customers are doing, but I believe that there's a lot more customers that aren't as comfortable going to those companies that would be much happier putting $100, $200, something like that into Bitcoin right from your credit union. And so I think that's, to me, that's the part we're thinking about here. And I appreciate, Edward, your thoughts in how you've been able to innovate within the credit union space. And certainly Kyle, I tell you, anytime somebody tells me that my regulator isn't going to do it, I'm going to tell them, well, hold on a second, let's get Kyle on the phone right here. No using that excuse here. So I appreciate those comments as well. So thank you both. I think this is a great discussion.
Jay, you mentioned the biggest strength. Credit unions already have relationships. They're trusted. They know you. They have your account number. They're going into this fight, so to speak, with a lot of advantages.
I think you're spot on there, Kyle. Excellent. Well, Tim, thank you.
Yeah, thank you, Kyle, Edward, and Jay. Pop on the slides. Here we go. All right. So now just for some housekeeping, make sure to submit questions using the chat at the bottom of your window. Feel free to also use the chat for general questions or comments. And then remember to please remain muted unless you are presenting. And then so the startups will have 6 minutes to pitch, followed by a 2-minute Q&A, and answer the poll for the following each startup presentation. So with the first startup, I'd like to welcome Nathan from Rails. Through their accounting data as service API, Rails is empowering the SME economy by providing financial service organizations with access to customer data in order to better access the true financial health of the business.
Awesome. Thanks a lot, Tim. Really enjoying the webinar so far, especially that last panel. As Tim said, I'm Nathan Adamson, Director of FinTech here at Rails, and we provide a single connector to allow credit unions to connect to their small business customers' financial data. Our team strongly believes the future of finance is built on fast, easy access to normalized financial data of your small business customers. To access this data, we've built a single connector that can plug into over 90% of the accounting and ERPs that your customers currently are using. We provide wide coverage in the North American market that can connect to the small mom and pop shops that are typically using a QuickBooks Online, or to a large established business with over 300 employees that would be using an ERP like Oracle NetSuite. Our connector is bidirectional. Once a business has connected, Rails can pull the historical data as well as continuously sync this data throughout the life cycle of the connection, allowing us to pull reports like financial statements, such as a P&L, balance sheet, or cash flow statement, and even invoices. Rails can also push data back to these systems, such as bills, bill payments, journal entries, and attachments. Having this on-demand access is huge to enhance underwriting, opening up more credit opportunities, evaluating ESG impact, or just providing better services to your customers. But traditionally, just retrieving this data is a manual process. And it doesn't get better even if you do get access to this data. Just a quick example, there are over 30 million small businesses in the US using accounting services today. Each business has its own chart of accounts, and each one of these accounting services has its own taxonomy. This data, once retrieved, is very messy and difficult to work with. Thankfully, the Rails data team has solved this problem with normalization by building a universal chart of accounts that is agnostic to the business and their accounting service provider, making accounting data no longer a nightmare to work with, but becoming actionable, insightful data to enhance that underwriting or better help your customers understand their financial health. I'm not sure how many data scientists are on this call, but there are probably a lot of people wondering, why is data normalization important? What can this do for our team? Well, having financial data in a universal output has allowed Rails to build a powerful insights and analytics layer on top of the normalized data. As an example, Rails is able to auto-compute over 50 plus financial ratios, like credit models like probability of default, to liquidity ratios, leverage ratios like debt service coverage, efficiency ratios, and profitability ratios like EBITDA. I actually couldn't even fit all 50 on the screen, and this is just the tip of the iceberg. Just in the last year alone, Rails has built numerous products that are all powered by our normalized data, like the Rails credit score, a new and modern business credit score that is always up to date. The Rails accounting accuracy score, which measures the accuracy of the accounting data by overlaying banking data to match up transactions, as well as business valuations, financial forecasting, benchmarking, fraud risk metrics, and we just released multiple definitions of probability default, looking at things such as days past due, balance sheet default, cash flow default, and insolvency. But Rails is not just limited to accounting connections. Just last year, we released access to our banking data, as well as announced our partnership with Citadel, who just announced today they're called True after their massive Series A for payroll data, and Paralytics for our tax benchmarking product. Later this year, we also will release Commerce, making Rails the single point for all financial data of your SMB customers. All of these insights and analytics can be viewed and monitored via our financial visual dashboard, or it can be exported in any file type you like, such as traditional PDF and Excel directly into your systems. Rails is currently live with over 100 FIs and B2B fintech clients, such as insurance companies like Coterri, who is using Rails to speed up their application and approval process, better underwriting, and renewals. M&T Bank, who's using Rails to gather insights on their small business customers to provide better services back to them, such as real-time cash flow dashboard within their SMB banking portal. And Divvy, who is using Rails within their credit application to give out more lines of credit, as well as higher amounts. This correlates to more spend by their customers, and more spend means more revenue for Divvy. Build the future of finance with Rails. As a quick recap, we connect to all the major systems your small business customers are on. We connect that messy data in real time. We normalize the data, and then we analyze the data to auto-compute all of those amazing insights and analytics, making Rails a powerful product for your credit and BD teams. Rails is built by a passionate team of engineers, data scientists, and product people who love working with financial data and empowering the backbone of our economy, the small businesses. We closed Series A last year and are backed by some of the best fintech investors. Thank you. As we continue to build the largest financial data network, my team and I are looking forward to connecting with anyone to show you a full demo of Rails, as well as answer any questions you might have. Thanks.
Great. Thank you, Nathan.
Cool.
So looks like we have a couple questions down below in the chat. How accurate is the data normalization?
Yeah, so right now through all of our connections, when I say connection, I mean a small business that's connected to Rails. We're seeing that being about 98%.
Does Rails use zero copy integration?
I'm guessing when they mean by, I don't know what they mean by zero copy integration. We do integrate with the accounting service Xero. If that's what they mean, maybe Dominique, you can maybe give me a little bit more context on that. GDPR compliant and not currently. We're only live in North America and have clients in the US and Canada.
And then any exciting customers and use cases in the lending space?
Yeah, I mean, alternative lending is our biggest use case. Because we are a white label product, we don't really get to have too many case studies. We do have some major ones coming out, like the M&T case study is coming out. We have another one coming up with Whatify, which is one of our newer clients. But if you look at Rails, like let's say, in a live environment or a production environment, it looks like it's part of their existing platform that they built. And that's actually on purpose.
Alrighty. Thank you, Nathan, so much. And we'll move on now to AirKit. So next is Ben with AirKit. AirKit is a customer engagement platform to rapidly build and deploy intelligent digital channels across any channel. And Ben, I'll let you take it away.
Appreciate it. Thank you, Tim. Just share my screen. Hopefully everyone can see that. Cool. As Tim mentioned, my name is Ben Smorge. I lead partnerships here at AirKit. Super excited to be here today and appreciate everyone hopping on. So do want to start by just kicking off with a little bit of background on the company. So company's been around since early 2018, but our founding team has been together for about a decade now. Previously started a company called RelateIQ, which was the first AI-powered CRM. Sold that to Salesforce in 2014, worked directly for Mark Benioff and became the team responsible for launching Salesforce Einstein. But it was also there that they were witnessing all of these companies undergoing these massive digital transformations, credit unions, big financial services companies, insurance companies, and doing a great job of tying Salesforce to the center of this. But Salesforce and systems like it, really systems of record, right? They're not systems of action. It's really hard to take that data outside of a system like Salesforce and put it in the hands of the customer in this digital first world that we all live in today. So they saw the opportunity to leave Salesforce. We got some money from them and some other tier one investors to really build the future of customer engagement. Since then, these are just a few of the companies we're working with today, but anyone from Fortune 50, Metlife, public sector, state of Maryland, even digital first brands like OpenTable, all leveraging AirKit in different ways to automate their customer experience. And so where do we come in? AirKit is a customer experience automation platform to automate customer workflows across web, SMS, email, and voice, and deliver that faster than ever before. And so, why are customers trusting AirKit today? There's a lot here on the slide, and hopefully we'll give you all access to this at the end. But I think it really comes down to four main key factors to success. First of all, we are a full-featured CX automation platform purpose-built to build and orchestrate omni-channel customer journeys and deliver those faster and easier than ever before. And so we're really focused on meeting the customer where they want to be met, right? Engaging them on every channel, delivering these experiences faster than ever before in a low-code environment with pre-configured templates that we have out of the box and almost Legos purpose-built for customer experience. Tying into the systems you've already made investments in, whether that's a system like Salesforce, whether that's a system like Genesys or TalkDesk in the contact center, or even a homegrown system we've integrated with all of them. We want to make sure that we can extend the power of those investments you've already made. And then overall, trying to lower that total cost of ownership, right? Limited engineering resources required to build on top of AirKit, not needing heavy professional services involved. All really great assets on why customers are trusting AirKit today. So do you want to just dive into a handful of case studies? And I'll start here with Guardian Insurance. And Guardian came to us with a problem and said, hey, we're getting 400,000 plus calls a year. 50% of those are repeat callers calling about what is my claim status. The average handle time for that was 60 minutes. It was costing them about $4 to $6 a call, right? And so what we gave them the option, say, hey, calling in, recognizing the number, saying, hey, Tim, we know there's a claim associated with your name. Do you want to deflect this to digital and get an update on your claim status? Press 1, get sent SMS, see where your claim status is. But what's awesome is now that we've collected SMS opt-in, we can then proactively engage as there are updates made in the backend system with a claim here. And so for them, what we saw is the average handle time went down 97%, saving them about $5 million a year from just this one simple use case. And I think most importantly, it took 2 weeks to build and launch this experience on AirKit. Second use case study I want to talk through is our friends over at Metlife. So Metlife came to us with a problem and said, believe it or not, we're in 2021. We still have folks signing up for life insurance on paper. Okay, kind of mind-boggling to imagine here in 2021. But they had 250 individual paper forms that they were mailing out to people's houses based on demographics, based on where you lived, and expecting people to fill that out and then mail that back in. As you can imagine, completion rates were absurdly low. And people were filling out incorrect information all the time. About 40% was not in good order. That's where that NIGO comes from. So what we did for them is we took these 250 individual paper forms, digitized it into one end-to-end experience, tying into 7 different systems throughout the entire process, pre-filling data where it's possible. And what we saw there is a lift, 2x higher completion rate, 3x higher NPS, customers were way happier, and got that NIGO score down from 40% to 0 in that AirKit experience. You know, this is accelerating revenue for the business by tens of millions of dollars for them. And then finally, I do want to provide kind of the art of the possible with AirKit. So this is a release that I'm super excited about. And I think the thesis for us at AirKit is we really believe that traditional customer portals are fundamentally broken, right? You have these legacy systems, you expect customers to come to the website and log in and they forget their password. And so what if we can connect to that person in the moment in time to have them take action in an omni-channel, hyper-personalized fashion and kind of recreate the entire, in this case, KYC process, but you can kind of imagine the art of the possible expanding beyond that, all while connecting to the backend systems. And so this is mobile friendly. It's not a native app that someone needs to download. They can solve for action there and then be able to get out of the experience and be re-engaged over SMS in an omni-channel fashion. So did just want to kind of paint that for everyone on what's possible. I know I don't have a whole lot of time, so I'll wrap it up there. Again, my name is Ben from AirKit. My email is very simple. It's just ben@airkit.com. Please let us know if you have any questions.
Alrighty, thank you, Ben. So I believe there's a couple questions following in now, but what are the typical use cases in financial services / credit unions?
Yeah. So I think for us, it's really about digitizing manual processes today. And so that comes up in financial services with digitizing paper forms, right? Automating enrollment journeys. We saw a KYC example there. That's a great use case. Deflecting highly transactional calls, either for service or status. So if a ton of people are calling in about changing an address or making a payment or just checking a status, great opportunity to deflect to digital for AirKit. And then the last one is appointment scheduling. If you want to try it out on your own, I would encourage you to go to First Fidelity Bank's website and go to the top and try to schedule an appointment. That's an AirKit experience built for them.
What's your typical POC process?
Yeah, really good question. So I think for that one, it's really about kind of working with our team and scoping out, hey, can we find a super high value use case? And I think the power of AirKit is really being able to iterate quickly. So we can show the team kind of the art of the possible. If we want to deploy, we typically want to do, 6 to 12 month deployment so we can quickly iterate and change and make sure that you're getting the highest value out of AirKit. But it's really a collaborative process between our team and yours.
Awesome. If there's any last questions here. But yeah, thank you, Ben.
Appreciate it, Tim. Thanks, everyone.
Alrighty, and lastly, for our final startup presenting would be Mantle. Evan with Mantle. And Mantle is an account origination platform that delivers a seamless member experience across any channel, virtually, in branch, or in the field, empowering credit unions to compete in today's digital world.
Alrighty, thank you, Tim. Can you guys see my screen? I think silence is a good thing there. Awesome. So I was actually down in DC at the same credit union conference I think Kyle mentioned earlier on in the webinar. So pretty timely discussion for me. Been talking to executives from credit unions pretty much all week on their digital transformation specifically. So my name is Evan. I lead our growth team here at Mantle. Probably going to talk less about Mantle today and less about pitching our product. I think one thing that stuck with me earlier was what Kyle mentioned. You don't need to be experts within the fintech space. That's what your fintech partners are for. So I really want to take this time to really educate on you all what we think is required and needed to win digitally. At a very high level, we are a typical tech startup, meaning we get to challenge the status quo a little bit, and we certainly get to do so and really push the envelope in terms of thinking about what's next and what's actually needed to win digitally today. Why we exist is, there's no surprise, and this is the theme of today and probably why we're all here, is that if you look across any industry, consumer preferences have changed, and they've changed significantly. The bar that our pals over at Amazon, Walmart, Nike, etc., the bar that they set for the digital experience is the same experience consumers demand across the board. Unfortunately, community FIs and credit unions technology within that segment hasn't necessarily kept up. And there's been a tendency to lean on legacy core solutions out there that certainly just aren't meeting the needs of today's consumers. So what do I mean by that? One thing I heard from executives down in DC time after time is that they have an older member base. They don't want technology. They prefer to coming in branch to open up an account. We don't necessarily see that true here. So when you look at the data, over to the right is where consumers have indeed opened up an account. And actually, if you look at the data, about 2/3 of consumers of Gen Z and Gen X have actually already opened up an account online. And for millennials, that number is 80%. Now, so it's pretty fair to ask ourselves, is it we're not seeing any digital growth within our credit union, or are we making it so difficult to open up an account online, they're actually going elsewhere? And I think the more interesting thing is when you take a step back and look at the macro environment and where it kind of look at a market share analysis of where these checking accounts are going towards, they're not going to credit unions. They're going towards money center banks and those neo banks out there. And a cornerstone study was published in Forbes last week. I encourage you all to read it. In 2020, so just 2 years ago, about 15% of all new checking account openings were going towards a credit union. Fast forward to just January of 2022, that number is down to 8%. And we're seeing something similar happen across community banks as well. And all that growth is going towards the money center banks and the neobanks, like I mentioned. It's not because they're opening up new branches. Neobanks don't even have branches. And certainly not because of interest rates. We have them there. It's because they're able to provide the digital experience that consumers actually want today. So online account opening isn't new for credit unions. About 55% of credit unions out there have an online account opening solution. But when you dig into the data today, about 64% of accounts across the industry, across all cohorts, are being opened digitally. When you look at just credit unions specifically, that number is just 5%. And there's this widening gap that exists. So why is that? And this is what I want you all thinking about and hopefully walking away with, is that there's this massive technology gap that exists out there. I encourage you all to, as homework, to try opening up an account with Chase or with Chime, with one of the major neobanks out there. It's a great and seamless experience. Now, it's almost ironic as credit unions, we talk a lot about creating the optimal member experience. It's at the center and heart of what we do. However, let's think about that digital experience we currently have. Is it the positive member experience we want? And ultimately, it shouldn't be your digital channel versus your in-branch strategy. Your digital channel is a leverage, is an extension of your branch network. So there are 5 pillars we think you should be thinking about. 1, it takes too long to open up an account. When I asked pretty much every executive I spoke to down in DC how long it takes to open up an account currently. At the minimum, I heard 5 minutes. Usually it was like 10, 15, or 20 minutes or more. That is not a positive member experience, but better yet, that's going to drive significant abandonment. And data shows us anything above 3 minutes is when you'll start to see significant abandonment. So when you go to open up an account with Chase, it's sub 3 minutes because that's kind of that tipping point right there. And we feel like abandonment and ultimately conversion, that's how you actually quantify member experience. 2, poor fraud, KYC, AML automation. When I was speaking to executives down in DC, we often heard that even though they had an online account opening solution, an employee either had to manually approve that application or they saw a lot of fraud coming through from it. And fraud is a very real thing in a digital environment. So it's not just member experience, it's about employee experience as well. How can we use technology to A, get deeper insight into the type of traffic coming through? Let's stop fraud before it even gets here. And 2, how do we automate as much as possible? 3, it's not mobile responsive. We see about 60% of our checking account traffic coming through mobile, meaning if you're not mobile first, you're already missing out on over half of the pie right there. No real-time core integration, self-explanatory, and poor funding. That ties right back into member experience. Oftentimes, we're not providing the funding options that consumers want today, and we often hear that accounts are being open unfunded or very low initial funding amounts, $10, $20. It does not need to be that way. We love instant account verification. That's a great member experience, and we see that leads to about 3.25x higher initial funding amount. So we're coming up on time here. I'm not going to bore all of us with the Mantle solution here. If you guys are interested, you could reach out to me after, but I want to leave you with this. We just went over 1 through 5 here. We think these are the 5 pillars to having a best-in-class digital strategy. You do that right, when I mentioned that credit unions are only opening about 5% of their accounts digitally, we think the 20% rule. And when we look at all of our FIs on our platform, at the bare minimum, we think you should be opening up at least 20% of your accounts digitally today. Higher performing credit unions should aim for about 30 to 40%. So that is all I have right now. Can I field any questions from the session here?
Thank you, Evan. Yeah, you talk about better member experience. How do you actually do this?
Yeah, so that was a common theme that I heard in DC. Every time we speak to an executive, it's all about member experience, right? But in today's world, in a data-driven world, we need to be able to quantify that. So how we quantify that is that metric I mentioned earlier, conversion rate. So to put that in perspective, when you have a lower performing solution that takes too long to open up an account, we're asking too many questions, that's where your conversion rate is going to be about 5%. So to put that in perspective, 100 people go to your website, only 5 are leaving with a booked account. If that was happening in branch, I could almost guarantee your leadership team would be firing off the alarms. That is a serious problem. So how do we decrease friction to increase conversion? And that's the proxy you should be using for a member experience.
Great. And how FI's mindsets have changed in the post-pandemic world? Are you seeing a higher interest in Mantle's offering?
Yeah, it's actually interesting because one of our value props too is also the speed to raise deposits, being that conversion is so high. Certainly what's happened in the macro environment over the past 2 years, not many FIs need extra deposits. However, there has been a need to digitize, and it's not so much branches being closed, but I think the past 2 years has just accelerated the growth where now that digital experience is part of the overall experience. So certainly a lot of eyes have been opening it up that if they don't digitize today, they're missing out on an entire generation.
Great. And I think we got a final question here. Are you embedding your solution in existing banking apps, or do you provide a standalone app?
Yep. So we are a web-based solution, and I didn't even mention this a little more Mantle specific. We are 100% white label, and why that matters is back to conversion. A lot of solutions out there, you're being redirected, and when you're being asked personal information, you're actually going to see abandonment because a customer feels like they're being driven to a new website, and they're going to think twice about providing that personal information. So creating that white label omni-channel experience is super important here.
Great. Thank you, Evan. And yeah, thank you all for attending our webinar. Thank you to the speakers as well. Make sure to fill out the pop-up survey. And if you have any question about us at Plug and Play, or were unable to answer the poll for introductions to the startups, feel free to reach out to me at t.gervin@pnptc.com. Thank you and have a wonderful day.